Good morning, everybody. Thank you for joining us. This was a very unplanned webinar this morning. We had already scheduled and sent out an email that we are doing a public webinar tomorrow morning. So if you want to join us, please go to public webinars on our website and sign up for that webinar for tomorrow morning. But we wanted to do this impromptu webinar today because Jim got excited. Good morning, Jim.
Good morning. Good morning.
Hi.
All right.
Just a quick commercial, everybody, for our primer. The early bird pricing got extended since we were busy and hadn't done a public webinar recently. And so it has been extended until this Sunday, July 9th. You can sign up right now for $369. That is the early bird pricing. If you're curious for more information, go to our website, jimdaltontrading.com/courses. You can see this is featured up at the top. This primer runs from August 2nd to 10th. It's an 8-day course. It's great for those of you that are new to market profile, already a little bit familiar, just want to hear Jim teach the concepts so that you can make sure that you know them correctly as we teach them. As well as for people who are already experienced and want a good review, hear newbies' questions and see how far you've come, as well as maybe it's more important for you to join us for the latter 4 days of the course, in which Jim will narrate the live market, put everything together so you can see how the variables come together, and also get our daily reports, which is our form of homework. And obviously, like I said, hear Jim narrate the market no matter what comes at us. The first 4 days are linear teaching, and we're going to be basically teaching the first few linear teaching portions from our foundation and application of the market profile e-course. It is a live course so that you can ask questions, and all of the webinars get recorded in case you're not able to attend live or you just want to review. And you will have access to the materials of this primer for 3 months after it finishes. If you have any questions, by all means, shoot us an email down here at our website. That's our email address, dalton@jimdaltontrading.com, or give us a phone call at the number here, and I will be happy to speak with you and answer any questions that you have. Okay, Jim, I will hand it back over to you.
Thank you.
There you go. I've given you the screen.
Okay, and just one more comment. We will do an intensive in the fall, which is our major course. If anybody's interested in that, remember that the prerequisite, unless you've attended a previous intensive, the prerequisite is the foundational e-course. You can look into that, but just as a heads up. All right, the reason I wanted to do this morning, and I actually woke Jen up to get it going, so I do apologize to Jen for that.
But yeah, right. We all know you're not sorry about that.
Yeah, I really am. But I think it's so important. This really is the start of the second half of the year, and the market, I think, is greatly overextended to the upside, and that doesn't mean that it won't go on for a long period of time. But I think it's an important starting point to get started for the second half of the year. Just to kind of a fast review, and we're going to have a fuller program tomorrow, but this was such an important day. Remember, you've got the FOMC minutes being released this afternoon at 2 p.m. That has the potential to, give the market a better insight as to what the members of the FOMC were thinking. Additionally, following the close, you've got the John Williams is going to be speaking at 4 o'clock. So after the close, that also could add some light onto this. But I think the other things that are important in here is that earnings season really starts next week with the reporting of the big banks. So even though the market is up substantially in here, we're going to see next week as we start earnings season, if this advance has been supported. So I think it's important to get the right frame of mind here for the next few days, and at least to get a good start for the second half of the year. Now, Monday was a partial day, but I'm still including the Monday as a regular day for gap purposes. Where we are right now, we would gap lower relative to Monday's low, but we're also at the low this morning. It's just a couple of ticks above the gap from Friday. So it's a very interesting place in here, and could lead to a lot of volatility because you're gapping, and the support level is the gap high from last Friday. So this is not, it's not a particularly comfortable place for short-term traders in here, and particularly with the FOMC meeting or minutes coming out this afternoon. As you start the session, the guideline for you to get started this morning are what we call the gap guidelines. The gap guidelines are as follows for those that don't know them. Right now, we would gap lower. With a lower gap, of course, overnight inventory is going to be short. And of course, the odds are always strong that we get a counter auction relative to overnight inventory. The gap guidelines are as follows. Go with all gaps that aren't filled fairly quickly. And to fill the gap, you would have to trade back up into Monday's range. So failure to fill the gap tells you to go short on the market. The best on a lower gap, the best opportunity to go short is on an attempt to fill the gap where both tempo or pace slows and volume dries up. If the gap is filled, then your attention shifts to developing value. The strongest reaction to the market this morning would be to see the market fill the gap and have value be overlapping to higher relative to Monday. The weakest reaction this morning would be to say the gap is not filled and the market starts to trade back down into Friday's gap. A severe reaction would see Friday's gap filled. It's a large gap. The larger the gap, the lower the odds that the gap will be filled on the first attempt. Now, it doesn't mean it can't be filled, but the odds are low that it gets filled on the first attempt. If Friday's gap were filled, that's a sign of a pretty weak market in here. So I don't have, we're going to talk more tomorrow, but I just wanted to, people that are starting off for the second half, to have just a little bit of my thinking on here. I think the market is overextended. And there's two things that can happen. The healthiest thing for the market would be for the market to have some type of inventory correction, but not severe, allow short-term inventory to come in balance, and then begin to march forward. The weakest response would be for this to be the start of a more meaningful correction. A more meaningful correction would see the market, close the gap and get back down into these prior multiple days of value below the 44.38 level. So again, I have no idea what the day's going to do other than, as of right now, we would gap lower, and the gap trading guidelines are in play. Okay. I'll take a couple of questions. We're not going to take a lot of questions. I just wanted to just kind of set you up for what I see to start the second half of the season. It's not really the second half, but for all practical purposes, it is. Jen, a couple of questions and then we'll go on and
Okay.
trade the market.
Are you looking at the overnight, the multiple distributions?
No, I'm really not. The one distribution would correspond with Monday's low. So from that aspect, I would be looking at it. My real focus is, do they or do they not fill the gap? Filling the gap would mean you would trade back into Monday's range. Okay. Anything
Okay,
else?
and then the question that I had heard you mention before we started the webinar, somebody was asking, typically you've counted shortened trading days as overnight, or put that in with the overnight, and mostly disregarded them. How come you're treating Monday differently from other early close days?
No, I don't think that's what I've done. It's if I have, I'm treating Monday as a regular day.
I
I'm
guess
not.
the way to put it is you usually put holidays, you don't usually consider them as part of like an RTH, whereas, Monday was a shortened day because of the holiday, but it wasn't a holiday per
But
se.
it
So I
wasn't a
guess,
holiday. I'm treating it as a regular day.
okay, so that's a
Electronic,
distinction. A trading day that's shortened, I guess Jim is saying is that he may treat that differently from what is actually like a holiday.
yeah, the actual electronic trade during the holiday, I'm disregarding. Monday, I am not, because while it was a shortened day, I'm treating it as a regular day. Okay? Final
Okay.
question.
Let me see here. Jim, do you think the ES is better to trade than the NQ? I'm struggling with the NQ and thinking of making the switch to the ES.
The NQ is a total different personality. It's more of a technically oriented market. It is a much thinner market. The references aren't as reliable on the NQ as the ES. I think the ES is more for a more experienced trader. An inexperienced trader, I would suggest that they start with the ES. A more experienced trader that understands the lack of exactness with the NQ might prefer the NQ. Let me say thank you very much, and we'll be back with a fuller webinar tomorrow. But this was just to kind of set the stage and remind you that, we do have the FOMC minutes this afternoon. You've got, of course, the Friday, you get the jobs report. It starts tomorrow with ADP, then you get the jobs report on Friday. You've got the earnings season really kicks off next week. And then again, don't forget, you've got another Fed meeting in the middle of, or near the end of the month. Thank you very much. We hope to see you tomorrow. Bye now.
Okay, Jim, and just to let you know, a lot of people were giving you belated happy birthday wishes.
Thank you.
Okay.
Thank you.
Okay, thank you, everybody. Hopefully see you at tomorrow morning's webinar. Thank you. Bye-bye.